They've built trillions in secret vaults, while you stand to lose 40% of your family's wealth when you die. Today, I'm revealing 10 covert tools the ultra-rich use to funnel billions tax-free across generations. Brace yourself. It will change how you view money forever. More than half of America's 100 richest people exploit special trusts that have cost the U.S. Treasury over $100 billion in just 13 years. Meanwhile, ordinary families face brutal estate taxes that can wipe out almost half their life's work. Imagine building $2 million in family wealth, only to see $800,000 vanish at death. The wealthy don't pay that tax. Their fortunes grow instead. Here are the 10 ultra-wealthy playbooks you'll learn today. Family trusts, generation, skipping trusts, dynasty trusts, private foundations, step up in basis, buy, borrow, die. Life insurance trusts, family limited partnerships, offshore structures, offshore insurance wrappers. Stay with me. Tool number 5 alone could save your family millions. Tool number 1, family trusts, the legal fortresses of generational wealth. When ordinary assets pass directly, Uncle Sam takes up to 40%. But in an irrevocable trust, assets aren't yours. They belong to the trust, which never dies. No probate, no estate tax. A $50 million estate outside a trust loses $20 million to taxes. Inside, zero. Wealth compounds undisturbed, generation after generation. Tool number 2, generation skipping trusts. Instead of taxing both children and grandchildren, GSTs skip one layer. Grandparents fund a trust for grandchildren directly. With the 2025 GST exemption of $13.99 million, that's nearly $14 million passed tax-free. Once the exemption sunsets to $7 million, these trusts will be even more precious. Families preserve over $8 million compared to traditional inheritances forever. Tool number 3, dynasty trusts, the ultimate perpetual wealth machines. Certain states abolished the rule against perpetuities, allowing trusts to last centuries. Fund $10 million at 7% growth for 200 years. You get over $7 billion tax-free. Asset protection shields against creditors and divorce. Control distributions across great-grandchildren and beyond, ensuring your dynasty endures. Tool number 4, private foundations. They look charitable, but act as tax-free holding companies. Donate $10 million. Snag a $3 to $4 million deduction immediately. Your foundation pays only 1.39% excise on gains, while you control distributions. Pay family members reasonable compensation for admin, travel, salaries, benefits, all deductible. Ford, Gates, Rockefeller. Their foundations do this to preserve wealth across generations. Tool number 5. The step-up in basis loophole is the single biggest tax erasing provision, completely legal. Buy stock at $10, watch it grow to $1,000. Sell in life, pay hefty capital gains. Die holding it, heirs receive basis at $1,000. Capital gains vanish. The Congressional Budget Office says over 50% of these benefits flow to the top 5%. Middle-class gains are small. Billionaires erase hundreds of millions every year. Tool number 6. Buy, borrow, die. Wealth's holy trinity. Step 1. Acquire appreciating assets. Step 2. Borrow against them with low-interest SBLOCs. Loan proceeds aren't taxable. Step 3. Die. Step up wipes out gains. Borrow $50 million against $500 million holdings. Live off the cash. Then heirs inherit $2 billion tax-free. It's a 12-point tax rate advantage the rich bank on every day. Tool number 7, irrevocable life insurance trusts, or ILITs. Instead of owning a policy directly, where death benefits get taxed, an ILIT holds the policy, so the payout passes to heirs completely tax-free. A $20 million policy direct cost, $8 million estate tax. In an ILIT, 0. Plus, creditor protection and precise distribution control make ILITs a staple in elite estate plans. Tool number 9, offshore structures and tax havens. An estimated $4 trillion of U.S. wealth sits offshore, hidden in shell corporations across zero-tax jurisdictions. Layered entities obscure ownership. Banking secrecy laws protect anonymity, and citizenship by investment programs in the Caribbean grant zero worldwide income tax. For the ultra-rich, the world is one big, tax-free playground. Tool number 9, offshore structures and tax havens. An estimated $4 trillion of U.S. wealth sits offshore, hidden in shell corporations across zero-tax jurisdictions. Layered entities obscure ownership. Banking secrecy laws protect anonymity, and citizenship by investment programs in the Caribbean grant zero worldwide income tax. For the ultra-rich, the world is one big, tax-free playground. Tool number 10, offshore insurance wrappers, especially private placement life insurance, PPLI. These high-ticket policies, starting at $5 to $10 million, wrap investments in a tax-advantaged insurance shell. Gains grow tax-deferred, assets gain creditor immunity, and privacy is guaranteed by insurance secrecy laws. Regulatory scrutiny is rising, but for those with millions to invest, PPLI remains the apex of offshore planning. Despite billions collected, $1.3 billion in recent high-wealth audits, the IRS battles complex global structures and resource limits. And time is running out. The $13.99 million estate exemption falls to $7 million on December 31st, 2025. Ultra-wealthy families are racing to lock in these strategies. If you plan to use any of these tools, now is the moment. You've just uncovered 10 fortress-level strategies that keep the ultra-rich richer while you pay the price. This isn't conspiracy, it's the real game of wealth. If this shocked you, smash that subscribe button and ring the bell. Share this with everyone you know, because awareness is the first step to leveling the playing field. Dive deeper into these tactics in our next videos, and remember, they're not smarter than you. They're just playing a game you didn't know existed. Until next time, stay informed and stay empowered.